Now, this is the one that we did last week. This was just, still look at this one. This is pretty amazing the way it turned out. So this was on Tesla. So this is a kind of a new alert that I'm sending now. It's what I call a binary monthly butterfly option pinning trade setup. So what the alert is putting together out alerts that are really, really cheap. They're kind of a lower probability trades to hit, but they're really super low risk but high reward. So low probability trades but high reward to low risk. So you can see here's what made this trade so dynamic. So this was doing a butterfly, and we were looking on this trade, we're looking for a pin, which was this last Friday at $200. So we got into this trade on the 8th of February, okay? The expiration that we were working was the 16th, this past Friday, at Tesla's trade at 189.35. We did this targeted pin trade targeting 200. Now, did it with a butterfly, so super low risk trade. We did this at $2.50 wide butterfly, 197.5, 200, 205. We did the trade for 12 cents or $12 per butterfly spread, okay? So this is what's incredible. So it went out Friday, it actually pinned exactly at 200, which is pretty amazing itself. So this went out at up $231 per spread on your risk of $12. That's a 1,925% return in 8 days. So here it was on the 16th, the alerts that I sent out to the members said Tesla long binary monthly option pinning trade, trading at $200. Butterfly going out about 200, at that time it's up 215 per spread, 1,791. And then here it was right at going into the close. I was just, wow, almost a perfect pin. Actually, it was a perfect pin. So this was going out, up over, $230. The exact pin was 238. So huge potential. So that was just kind of an alert sent out, kind of one type of alerts that I'll send. And I'll show you a couple other examples here. Yes, question. These indicators are on wealth chart. Okay, these indicators are on wealth chart. So here's the Tesla trade. We set this up as alert trade right here. So we had a cycle reversal over here, actually right here. See this? And then see how it goes sideways? And then we get cycle 1 going positive. Then cycle 2 was starting to push up. So went ahead and did this right here because it was so cheap based on the parameters I'm looking for. And then we were targeting this 200 strike right here. So a couple of different things. This was a moving average coming in here. This was also 50% retracement level and option activity at that 200 strike. So that's this strike selection we picked. And so Tesla really is a great one for these types of trades. And so set up this butterfly. Of all the different option strategies, the butterfly will give you the highest potential returns on your risk. And that shows out on this one. So bought the 197.5 call, sold the 200, bought the 202.5. So really $2.50 wide butterfly. Total risk 12 cents. So that's $12 per spread. Potential profit $250 wide spread less your cost, $238. That would be the 1,983% return. It actually pinned at 200. So this at expiration was actually up exactly $238, which this is the first time I've ever seen that actually. So here's the trade. So here it was trading here at $200, right? On Friday. And this was right before the close of the day. You can see right up at the top of the tent. So the spread was at $2 or 12 cents. Now it was trading at 243. So that spread had blown out from 243 to 12. So 231% return, $231 per spread. So if you did one spread, you made 231. If you did 10, you can do the math. 1,900 over 1,900%. And then here's totally at expiration. So, when markets are settled and everything, it's on a Saturday, but this, you can't do the settlements on Friday, so it's done the next day. This is about as perfect as I've ever seen it. So this went out exactly at $200. So this went Net expiration, total expiration 238, so max over 1900% return.